Yeah, I'm losing my
Today I'm
edge.
giving you a history of sector rotation. Sector rotation, one of those buzzwords, buzz phrases, I guess, that everybody likes to use. Oh, this is classic sector rotation we're seeing in the market here today. Or, oh, over the last couple of years, you've seen sector rotation into this and out of this. I want to talk about what that means exactly, how it practically plays out, and how you could hopefully take advantage of it, or at least display your opinion on sector rotation. Because it is, though I make fun of the term a little bit because it's overused, um, it is something that's constantly happening. We look at stock indices, and here, why don't I throw a couple index, equity index futures up here, if I can get that to work. Yes, you look at NASDAQ and small stock 75, and you think of them as just, oh, sorry, my microphone wasn't up. You think of them, that probably sounds better, as just two distinct prices that this year, one of them is around unchanged and the other one is up 25%. But there's a lot of gears shifting in there, and you can get as granular as the stocks themselves, which a lot of people are acquainted with, Apple and Amazon and all those pieces. But then you also have those things basketed into these sectors throughout the stock markets, and depending on the stock market that you're trading, the equity index future that you're trading, you're going to have some of this sector, maybe not so much of this sector. And that's just attributed to the weightings of those individual stocks. And you would maybe say, okay, an equity index is an equity index. And so if I just find one that I like, I'll just trade it forever. But when you see something like this, two stock indexes that have high positive correlations and a divergence this year of almost 30%, right now sitting at about 25% as it's come in the last couple of days. And we're going to speak more specifically to that action and how that's occurred. It makes this decision a lot more important than maybe you thought. And the sectors that make up each of these indices and what is going on in the market, how they are rotating in and out, how this sector is outperforming and this sector is underperforming, is very well reflected in the index that you've chosen here. So you got to do your research. You got to choose wisely here, because whether you're buying or selling or you're just speculating in general, you could see, of course, you'd much rather have bought NASDAQ. But if you started out 2020, a lot of us did, with a bearish sentiment, greater downside in small stock 75. And if you're just trading a stock market, speculative, just looking for day-to-day activity, the small stock 75 showing you more of that as well. And that is going to be attributed to the way that the small exchange weighted each of these sectors within the small stock 75. You can see here that each of these five major sectors is given about 20%. That's 1/5, and that's equal weighting from technology to industrials to financials, materials, and then energy. Now you go over to the NASDAQ, and I bring up /MNQ because that's going to help us with what we're ending up trading here today, the micro NASDAQ, micro E-mini NASDAQ futures, if I want to call it its full name. This is what's attributing to the action here. And so if you can kind of infer a little bit, you can see, all right, NASDAQ outperforming small stock 75 this year, outperforming all the other major indices. Now, what's a little bit funky about that NASDAQ is it's almost 50% technology. Very few stock index futures have that large of a weighting in any sector. And you can see here the small stock 75, I think, a better barometer of how the stock market at large is doing, because it's giving you equal weighting of technology, which is very important, especially now in 2020. Technology stocks seem to be one of the only things that people talk about. But people shouldn't forget industrials, financial stocks, those big banks, materials, and then energy stocks as well, which are very important. And, you might say to yourself, well, energy, if I'm thinking traditionally about energy, those are, Exxon Mobil, these big companies that deal in oil and these antiquated, what some millennials and younger people might view as antiquated forms of energy for transportational uses and industrial uses and everything else. But keep in mind that you're going to see the sectors rotate in terms of their prices. And I really wish there was a database for this. So if anyone has this information, please do me a favor and create this website. Uh, I would be interested to look at what the technology names were back in 2000, because we're going to see that technology, it hasn't been just a straight shot higher for tech stocks. Those technology names got hammered between 2000 and the years that immediately followed there. And what I'm getting at here is that energy stocks right now are on their butts. No one's really digging them. They've been selling off year after year as the rest of the stock market has been taken off. But as that energy sector starts to rotate in some new companies, maybe some companies that have upside in the next couple of years, it might not be weighed down and kind of condemned to death like a lot of people are condemning that energy sector. And then also you got these other fun things in the mix here that aren't really performing at those extremes that we're going to look at via this chart. Now, this is 2020's action alone. So you're seeing a historically one of the biggest divergences between these sectors. But to my point earlier, every single day there is sector rotation. Every single day people are saying, we like this thing, we don't like this thing as much. We're going to buy this and sell this. And these sectors, after days and months and years that we're going to get to in a second, you get divergences. And you've got energy stocks down almost 40%. They were down as low as 60% in March. And you've got tech stocks up over 20%. It's wild divergence there. That is sector rotation at its finest. And this is why you've got a small stock 75 going back to this chart that's about unchanged, because we gave equal weighting to all five of these because we're saying we don't want investors to miss out on any specific sector, and we don't want people speculating or trading short term to miss out on any action. Because if you just traded tech stocks around here, you didn't get any of this big move lower and then a nice big bounce, a lot of action in here as tech stocks just kind of grinded higher by small increments and didn't sell off as much. So from the investment side, we didn't want you to miss out on any sectors. From the speculator side, the short-term trader side, don't want you to miss out on any action that could be happening in energy. And who's to say the last half of 2020, we don't see a big downside in tech and that kind of takeover, or materials or industrials. Don't want you missing out. And then also from the hedging side, the diversification of this small stock 75 allows you to say, all right, I've got a portfolio going back the last 3 decades, or even just the last 3 months. I've accumulated a lot of stocks in this sector and this sector and this sector. And if I have long positions in those and I go to NASDAQ and I sell a call in NASDAQ, or I sell a micro NASDAQ futures contract, I'm only hedging the tech stocks in there. And what you could see is underperformance in your long portfolio as your hedge that's merely in tech, with NASDAQ really hurting your overall portfolio there with the hedge. So hedgers, investors, speculators, I think that this diversification is key for a number of reasons. Now let's get to this historical piece. As we look at 2010 till 2020, you've got a little bit of the same story. Energy stocks at unchanged, tech stocks up 300% in the last decade. Industrials didn't expect to see this, but up almost 200% in this time frame. And then finance and materials somewhere in the mix there, ranging between 50 to 100% in appreciation. And so this is a trend that I have a feeling a lot of you have maybe consciously or subconsciously put together over the last decade. Not a lot of people talking about the potential upside in XOM or CVX, Chevron, another one of those, or some of those more in the weeds tech stocks, energy stocks like Occidental and Apache. Those have just been getting hit. A lot of negative sentiment around those. And everybody and their mother wants to talk about technology stocks that have seen this 300% upside. You've got Tesla, I think that some people would say is a poster child for tech stocks, that's up about 200% just this year. You've got Apple and Microsoft competing for the largest market capitalizations by miles in the stock market, which is really crazy. Both of those, I'm pretty sure, above $1 trillion in market cap. And so a lot of stories in tech, positive, a lot of stories in energy, not so positive. this was interesting to me as we move from 2010 to 2020. Take another decade back in the past, 2000 to 2010, the aughts here, you're seeing energy up 125%, by far the outperformer out of all the sectors. And technology, there at the bottom, down more than 50% between 2000 and 2010. And this is what I'm getting at here is sector rotation. It's not this thing that's new, or that, oh, technology is up the last year, it's up the last couple of years, and thus it just has to continue into the future. Underperformers usually can adapt, and they can fix what's wrong with them. They can move from an energy source here, with energy being the example, that is more antiquated, that different automobiles and different factory spaces and different whatever the uses are moving on from, and they can shift to a different energy source. Or these sectors can change some of those names around, and not overnight, take out Exxon and Chevron and Apache and Occidental, those names already named, and just replace them with solar or wind or whatever. No, it's not a matter of that, but it's what the tech sector has done for the last 10 years and has helped contribute to this appreciation, which is tech has been favorable, but also they're adding smaller tech companies like Shopify that's taken off recently, or like NVIDIA and AMD, these semiconductors that have taken off. And it's a matter of shifting around those names a little bit, but then also these underperformers having to do something to get some of this performance back. And whether you want to think about it that conceptually, or you want to think about it from sheer market cyclicality, which dictates that into perpetuity, these markets don't just continue to do the same thing. Like, it's not sustainable, I think, it wasn't sustainable in 2000 until 2010 for energy to take off almost 300%, which looks a lot like this chart of technology, right? Only without the fall that hasn't quite occurred yet. At some point, these things shift. And whether you want to take the conceptual note, or you want to just think of, underperformers that have to at some point outperform, and outperformers have to come back to earth a little bit sometimes. I don't think that you'd expect to see from 2020 to 2030 another 300% in technology sector. I mean, you could see materials take off, and just innovation in that sector drive those stocks to be the outperformers in the next decade. Whatever it is, this is what sector rotation has looked like in the last 20 years. I just wanted to show how dynamic it is. We get so stuck in, if you read enough articles about, technology stocks are taking off, technology, they're not going to see any downside. You'll never see Apple below this price again. You'll never see Tesla below $1,000, or Amazon, and down the line. You read enough of that stuff, you think that this is just the new world and it's going to continue like this. I think there's a lot of back and forth to be had in technology in the future. And I think there's a lot of a lot of innovation that needs to happen in the energy sector, but a lot of ground to cover for energy to the upside as well. And so, getting back to the start of our story here, we have a NASDAQ stock market that is largely technology stocks. We have small stock 75 that gives you a nice chunk of every major sector there. You can trade these on a ratio of 4-to-1, 4 small stock 75 to 1 micro NASDAQ. And you can do this with whatever opinion. Now, I'd be more of the mind that it's not going to happen today or tomorrow, although the last 3 trading days we've seen small stock 75 make up some ground on NASDAQ, just a few percentage points. But in the medium to long term, I could see these other sectors make up a lot of ground on technology. And technology just see some bearishness that it hasn't really witnessed in the last decade. It's been more or less a straight shot to 300% appreciation in that sector. So if you want to go against the technology trend higher and with some of these other sectors, that'd be long 4 small stock 75 against 1 short micro NASDAQ. If you think that technology has more ground to cover against these seemingly antiquated sectors as they're trading right now in terms of price, then you go the other way. You could buy this micro NASDAQ and you could sell the small stock 75 and get that short exposure in energy and these other sectors. And this is what that portfolio would net out to: a pairs trade in equity index futures that in essence builds a portfolio that is, if you're long for these and short one of these micro Nasdaqs, long for forward slash SM75s, you would be short, your portfolio would be short about 25% of this tech. Is that right? Yeah. It would be about a new index that's 25% tech, long 17% industrials, and then a good amount of long financials, materials, and energy, that extreme downside piece against it. And it's just a new way to construct your portfolio with just two simple pieces here that you could flip on its head and get long a bunch of technology and short these other sectors against it. But it's easier than having to go in and pick all these different stocks to make up your portfolio, or pick all of these sector ETFs that are very capitally inefficient here. Looking at the small stock 75 in light of this history of sector rotation poses a very interesting trade to me against the NASDAQ.